Hey, you got your joke ready?
Kind of, but I hope you don't.
I don't have jokes. I have real life, man.
Oh, yeah.
I just always have real life scenarios.
No, we're avoiding crisis now. HR's already written you up once. We're not doing another.
HR left at 1:30 yesterday. I heard about this.
Yeah.
Left at 1:30.
Yeah, what's up with that?
I don't know. We're going to have to talk to him. Let's do this thing so we can get back to work here. Well, welcome to FinTips, everybody. I'm wearing a hoodie today because it's freaking cold.
Why is it cold in Florida?
I don't know. It was warm last night, wasn't it?
Well, I want to say that it's currently like 54 degrees out. That's cold to us.
Yeah. Look, I'm wearing this thing because I only have one jazz sweater, and I've used that one, so now I got to use this one.
Yeah. And St. Patty's Day, by the way. So,
today?
Look at there. Yes. Well,
no, Friday.
We're filming this for Friday. So.
Oh,
yeah.
There's the giveaway.
I didn't honestly put this on for that, but
St. Patty's. I thought Easter came first. All right, well,
St. Patty's Day.
Hey, man, enough of the bro show. Get to the goods.
Let's do it.
Are you finding yourself stressed and a little bit concerned about the stock market these days? Do you find that if you just had some sort of statistic that would let you know whether you should be stressed or panicking or jumping off of a bridge, that would make you feel better, Eric?
Yeah. Well, what about there's a lot going on,
I leave for just a couple days, and a freaking bank's like, whoop, going out of business.
Yeah. I think there's a lot to learn in this whole scenario, and
there's a lot to learn about.
Diversification,
emotion, and the biggest thing. The biggest thing is,
I like
my
that.
biggest thing is you gotta stop reading a headline and going, "Oh no," and doing something.
Yeah.
Now they get you on both sides. They get you with the doom and gloom, and then they get you with, "You better buy this or you're gonna miss out."
Yeah.
Right? Oh, it's so annoying. I actually had to write a specific email for clients to go through what exactly happened with SVB Bank so that I could teach as well. Because the media, I was sitting there in Georgia, in the mountains, trying to enjoy myself, and I'm like, they are literally claiming that every dollar is gone. You're going to lose it. Go get it from the bank.
Yep.
So careful there. Now, I want to go through a few things here today, and I'll start it off. There are a lot of sayings in the market. Sell in May and go away. Don't come back till Labor Day. The Santa Claus rally. You have these things. As January goes, so goes the market. And so we have a lot of this, but they're all based on stats. So in times of craziness, I want to share some of the stats with you. And how about that?
There we go. Check
Look at that
out. Now, have we tested this to see, does it look good on the
It doesn't matter. Cody's just going to superimpose if he has to.
Oh, wow.
Yeah.
We've got cool tech stuff.
We got
around
people,
here.
man.
I'm telling you.
Well, and not only that, those other guys don't have that.
Yeah, that's fancy.
That's pretty cool.
That's fancy colors there.
They're trying to be all professionals. Everybody else is so professional. Look, I'm wearing a freaking hoodie.
I am too.
That's true.
We're hoodies today.
We're just normal everyday dudes that just happen to be geeks about this stuff. Okay, this, my friend, is from an old class.
Yeah.
And what I was showing was the distribution of the daily return. So normal distribution chart. Yep. On any given day, here is the normal, how do I say it? So take every single day's percentage gain or loss.
Okay.
And put them over a bell curve and see, do we normally have 4% gains in a day?
Yeah.
No. Do we normally have 4% losses in a day? No. The majority of your day-to-day returns are plus or minus 0.5%. And I would argue plus or minus 1/3%.
Yeah.
So when you look at something like this, these events, which have to happen and do happen, plus or minus over 2%, you're getting on the outside of that bell curve there, those are at the tops and bottoms of markets.
Right.
Right now, we're here. We've got chaos in the stock market compared to history, right? So knowing that, what would you do with it? Well, you did it yesterday. You got excited and bought some stuff, right?
You're darn right I did.
So he's built up with the same chemistry that I am.
Yeah. The fact is, it's Warren Buffett said it best. It's a coined quote that he said, and I may not get it exactly right, but it's be fearful when others are greedy, and greedy when others are fearful. And it does take diversification. It does take, a lot of that, education. It's not just that, SVB's going under, let's go ahead and buy them. That's not the case. But when you're seeing a whole industry just tank,
Yep.
It creates opportunity, and you see that. And my wife struggles with that because she doesn't understand the markets. She doesn't understand.
Oh, my wife too, yeah.
And so the emotion's there. And for me, I mean, granted, I'm a human, man. There's emotion. I mean, I look and I'm like, oh, man, come on. I thought it was going all up. So but you got to realize, hey, when there's a massive swing, when we're supposed to be here, and there's this massive swing,
Yeah.
there's opportunity.
There's got to be opportunity there. And that's where I sort of led the beginning here by saying, don't read the headline. Make it your mission to learn what is actually going on, because the headlines will scare the living bejesus out of you. They started scaring me, and I'm like, did they really fail? We owned that stock. Why? What was happening? No, those people were a victim of their own success. Unfortunately, it caused emotion from everybody else to get going.
Yeah.
That was just to wet your whistle a little bit.
There you go.
Let's go on a little bit further.
Let's wet the whistle.
This one is a fun one. Also shared this from a previous class, but I changed it. So this one's unique for you guys here. If you were to bet, now when the market falls, of course, that's the discount. We know we want to participate. Think about it this way. If the market never bounced,
Yep.
we would all have the same problem. So if the market just goes to zero from here, it really doesn't matter. We're all done, right? So there's no fear. I mean,
No, you're
true.
You're absolutely right. People even look at this as, well, I'm going to flock to something, fixed. I want to go to an annuity that's, just paying this set return and backed by the insurance.
Yep.
If everything truly falls apart, if a bank can fold like this, do you not think an insurance company could fold?
Oh, they're even worse.
And so they're taking, risks with money too. And I'm not trying to say that to create fear, but what we're trying to say is that, this isn't something that's just this mass exodus, because if the whole market just were to collapse,
Yep.
your annuity's not going to pay either. Your pension's not going to pay either. Honestly, I mean, everything's going to be done. But I always joke about that. And I mean, for me, I'm like, oh, well, get ready to hear some trumpets because it's the end.
Yeah.
That's
what
the
was
idea there.
Somebody always says, like, what happens if the market goes to zero? And I'm like, it almost did one time. And literally one guy stopped it from going to zero. Like, that's how close it was. It was one part. They made a movie about it. But if you were to, at least in the stock market, we have odds.
Yeah.
If you were to bet on the market going down, Mr. Hard Landing here, this is for you.
Hard landing.
Hard landing.
Okay. Oh, okay. All
So
right.
if you think that the market is going to be lower, all I ask you to do is pick the time period that you think it's going to be lower, and I share with you your odds of success. If you say, at any point, I will make a 1-year investment because I believe, or betting on the market to go down.
Correct.
I think it's going to go down. You have a 24.9% chance of being correct. You like those odds?
Those are rough odds.
Those are rough odds.
Those rough odds.
Yeah.
I mean, if I'm a betting guy,
If you're a betting guy,
I don't want to say that I've only got a 25% chance of winning the bet, where
Yeah.
I may not want to place the bet.
got better odds in roulette, just pick black, right?
Yeah.
Is that right?
Black, red, or there's the little greens that ruin everything.
Oh, don't pick the green.
Yeah.
I don't know much
Well, you
about-
could pick the greens, but that basically means that if you pick black or you pick red and it lands on green, nobody gets paid.
Oh.
Unless you bet it on green.
So it's not even 50-50.
Yeah.
Okay.
Yeah.
Shows how much I know.
It's a weird one. You got to know these things, man.
6 months, 28.9% chance. In 1 month time period, there's a 37.2% chance that the market will be lower than where you started.
Yeah.
This is a rolling study, meaning we didn't just pick January 1st of every year, then go 2 years out. This is every single day, 2 years from that next day, and the next day, and the next day. You could do this in our research portal where you do a rolling search. I just did them all at once. So over a 10-year period, 5.8% chance of success that you would be right and the market would go lower, which is basically just me inverting these numbers, saying over a 10-year period, you got a 94.2% chance the market's going to be higher.
Yeah.
I just think those are rosy numbers, so I said, all right, doom and gloomers. You think that the next 1 year is going to be a horrible year, know your odds. You have a 24.9% chance of being right. If you're okay with that, you take a shot. I'm not okay with that.
Yeah.
I use that dip. I would say, okay, that dip in the market, I know this person's going to be wrong. I'd rather buy that.
Well, and at what point do you finally make the argument that the market has already fallen so much? It's already discounted. Like, there's already discounts. At what point do you say, well, hey, yes, it could fall more, but it could.
Yeah.
Everything is always the it could. Now there's a lot going on right now. The Feds are continuing to raise rates. They're fighting inflation. If you look at the stock market, it looks like a roller coaster. but you're looking at, an average annual return here, correct, on everything that you're looking at.
Yep.
And so your annual returns, I mean, if you're looking at an annual return, do you think the market's going to be positive if you started January 1 through December 31st of this year?
Yeah. Oh, a case in point is that
I think I'm betting that we're going to be positive for the year this year.
Oh.
Even though I still think that there's going to be an overall hard landing. I mean, we're not going to see this just complete rebound because we're going to play catch up.
Yeah. Well, and when you to his discounted point there, the only reason the markets get so much attention is because you can see it second by second.
Yeah.
When you went to buy your house, was that the cheap? Or better yet, when you went to Salvation Army and bought that hoodie, it was $5, right?
The Salvation Army.
You didn't ever go back to see.
Goodwill, man.
Goodwill. Oh, sorry.
You're right.
You didn't. Then $2. Then you didn't go back to see if it went down $1. You took it at $5 or $2 or whatever.
Yeah.
Because it's gone. We can't take a look. We purchased the house. We don't see the value. But the stock market you can see all the time. So just a quick snapshot so you can see the odds of you being successful are not very good.
Yep.
Also, I wanted to share this with you here. This is the 1 year forward performance based on the return in the market. So if the market had gained 0 to 10%, for example, that's 15 times 15 data points we're using here. If in 1 year it gains 0 to 10%, the next year it averages 3%. If the market gains 10% in a year, the next year it tends to also average double digits as well. If it gains 20% in a year, 7%. These are your average returns.
Okay.
Now, there's not a lot of data points here. Don't let that screw you up. So what happened last year? At one point, we were down 20%. Unfortunately, we did not fall more than 20% last year.
Yep.
So what's our average return this year?
24?
No, I'm sorry. Right
What are you looking here?
We were
So
less than we were down more than 10%, but
Yeah.
not down 20%.
Okay.
There are 13 other times in history that happened. The average performance the next year?
0.
0, man.
Okay, I see what you're saying there. And
It's
you're catching the chart there. Yeah, so I get exactly. Thank you for that.
I'm sorry.
Clarifying
Yeah.
that.
So I started going this way, but
Yeah.
that's where we were.
Yep.
And unfortunately, to expect a choppy market, unless you're leaning your hat on or hanging your hat on the third year of a presidential cycle, which tends to be positive, you have a recipe for chop. So these are just some of the stats that you can point out and go, if we gain 20% this year, that's odd. That would be really odd, and you would say, okay, I don't expect that.
Yeah, you're betting your odds because you're saying 13 times this has happened in history, and every time you've got to break even.
Yep, there you go.
Well,
not every time. I'm saying the average return
average-wise.
0, meaning think about what that had to be on both sides of the curve all the way down to get you that average of 0. Not a lot of impressive moves there. So just wanted to have a little fun with you guys on some of the stats and go with that.
No, I think that it makes sense. What people don't realize with the markets is, even historical performance, things like that. People will say, well, where do you get those numbers from? How do you project that you're getting a 7% return? All of these things. It's all about historical performance.
Yeah.
And it's all about, even looking back at history and saying, okay, what has it done? What can we learn from that? What will it do from here?
And I'm going to just say for the next person that comments, yeah, but history doesn't prove performance in the forward there.
Right.
Okay, you're partially right. But if that were not the case, then why are you all running up at the bank right now going to get your money out so you can move it somewhere else? Because history told you that a run on a bank creates problems and you need to go get your money. It was history that caused you to get out of the stock market last year because you were worried about what was going on and interest rates were going up. Oh, the yield curve inverted, and therefore history says we're going to have a recession, right? So you can't say, don't use stats because that doesn't make any sense. History won't repeat itself when you, your very self, are responding to history and the stats of history.
And emotion.
Best argument I've made.
Lots
right
of
there.
emotion.
TikTok that thing or wherever we post this stuff. Get on with it. That was the argument. I'm going to use that from now on.
Oh, it's St. Patty's Day. So why and banking. Let's go with the banking. This is actually from a client. Rob sent this in. So thanks to Rob. Why are Irish bankers so successful?
Something about the luck of the Irish.
Because their capital's always doubling. Dublin.
That's good on two levels there.
Right.
You know, I had to think about that because the words, you know how sometimes they'll say a word and you're like, I don't know what that means. And you don't want to sound stupid. So later on you grab your phone.
Well, that's why I wanted to emphasize Dublin. So, you know, like how it's spelled as well, since I'm saying it, not, you know, seeing it actually written out.
Yep. I'm that guy. I'll be in the other room going, what's the capital of Ireland? Because Kevin did that to me the other day. He was late. And I was like, what happened, Kevin? And he goes, I'm so sorry. I had to take my dad to the phlebotomist. And so I'm like, oh, well, don't let it happen again.
That's a big word.
I walked into the other room and I'm like,
What is a phlebotomist?
hey, Siri, what's a dad?
Oh.
Was that better?
That was good. That was good. You got me on that because I actually thought maybe you were telling me something good. That was good.
No, there you go.
All right.
Cleaned it up a little bit. Cleaned it up a little bit.
Thank you. All right. Well, thanks for the stats. Those are awesome. And you guys have a great rest of your day and weekend coming up.
Hey, stay warm out there.
Yeah, for sure.
Especially if you're in Florida, man. We're freezing down here.
Yeah, 54 degrees.